Hi, David Bassanese here, Chief Economist at Betashares, and I just wanted to give you an update on the current state of play with regard to markets and the economy in light of recent market volatility. And I'm sure, as many of you are aware, we've had a pretty wild ride on equity markets in the last few days. The ASX dropping 3.7% on Monday. So just what's going on? I mean, as I'm sure you've seen in the media, quite wild moves in equity markets. The Japanese market was down 12% on Monday. The US market down 3% overnight. A few things going on here. Firstly, we had a weak employment report on Friday in the United States. That's led to some fears that the US could tumble into recession and hence, potentially further equity market declines going forward. Perhaps more importantly, is just the shifting interest rate trends between the United States and Japan. The US looks like it will be cutting interest rates in coming months, whereas Japan is looking to raise interest rates from near zero levels. And that shift in the interest rate differential between the two has led the Japanese yen to strengthen. And it's led to a major unwinding of trades where people borrow yen to buy other assets. And it's called the yen carry trade. And really, that's sparked a major sell-off. I think that's really the main driver of a lot of the abruptness of the equity market sell-off in the last few days, more so than particularly fears of a US recession. Now, going forward, what does all this mean? Clearly, if the US does go into recession, there is likely more downside to the equity markets. My sense, though, is that the fundamentals for the US economy are pretty sound. Corporate debt levels, household debt levels are certainly not as bad as they have been in earlier decades. Many households and corporations are able to lock in low interest rate financing during the COVID period when interest rates are at near zero levels. Importantly, also, inflation in the United States has come down near to the Federal Reserve's target of 2%. And even before this recent volatility, markets were counting on the US central bank to cut interest rates in September. And they do have, ammunition to cut interest rates quite aggressively if need be. So all up, I mean, the good fundamentals of the US economy, the capacity for the central bank to be able to cut interest rates does suggest to me that a recession is unlikely, certainly anytime soon. And hence, I think this is more likely a period of volatility in markets, which hopefully should subside within coming days. And importantly, I should point out that I'll be conducting our quarterly economic webinar on Friday, and that will go in a lot more detail to the outlook for the global and Australian economy and the outlook for financial markets as well. Now, if you'd like to participate in that webinar, please go to our website and follow the links and sign up for it. Importantly, I think as we're seeing in the last few days, this is a reminder that markets often can be inherently volatile. And it remains important to stick with your longer-term investment strategy. I'm hopeful that things will settle down in coming days, but certainly I'll provide more information at the webinar on Friday. Thanks for now, and I'll see you again next time.